All right, welcome back to the program. It's time for us to delve into our conversation. Earlier on, I did tell you that I'll be having the IMF representative in Nigeria, Ari Aisen. He's with me right here at the table. Welcome to you, Ari. Good to see you again. It's been quite a while. Welcome to the program.
Thank you, Nancy. Appreciate the invitation.
Let's get started. Just before we went on a break, or when we started the show, I gave a brief, introduction of the IMF's SDR allocation, the approval on August the 2nd. It became effective yesterday, August the 23rd. I would like us to start by you defining what SDR means. I know it's special drawing rights, but it goes beyond those words. So what's an SDR allocation?
So the SDR is what we consider the IMF currency, but it's in fact a basket of 5 different currencies with different weight. So the US dollar, the euro, the yuan, Chinese yuan, Japanese yen, and the British pound. With different weights, you calculate the value of those currencies multiplied by each weight, and you come up with a currency that is SDR. It's important to define the SDR as a reserve asset. You cannot use SDRs to import something. This is not a currency that can be used for trade. It can be used for obligations.
So in essence, it's not money.
It's not money in its original form, but it can be quickly translated into money that can be used by our various countries, 190 member countries, who have SDRs in their reserves to deal with the relationships with the IMF and some other multilateral organizations.
So the SDRs, is this specific to be utilized by member countries to deal with the IMF and other member countries? Is it?
Yes, yes. So the IMF gives the SDRs, and countries have SDRs to use them in the relations with the IMF and other international organizations. They could, of course, exchange those SDRs by currencies that are freely available to use for international trade, for example.
Oh, okay. So how are SDRs determined, really? You know, how are SDR determined? Because when I took a look at, the various SDRs allocation to various countries, all your 190 member countries, and I'll come back to that in a bit. There were some conditions, not some conditions, as in quotas. So how are SDRs determined?
So the amount of SDRs of each country will depend on the quota that this country has with the IMF. The quota, in turn, depends on the importance of its GDP, global gross domestic product, of that country vis-à-vis the global GDP. And that's how the allocation of quotas is determined. And the SDR allocation that we are talking about, each country will receive SDRs in proportion to its quota in the IMF.
So in proportion to the size of the economy?
Exactly.
Vis-a-vis the global GDP?
Exactly.
Okay, I needed us to break all these things down.
It's very good.
So where does Nigeria fall? Because taking a look at even the quotas, of course, there are a lot of economies and their sizes. The US definitely sized, UK and all of that. Their SDRs are more than the other countries. So where does Nigeria fall? Is it really middle income or low income? How does the IMF classify Nigeria? Because there seems to be a bit of, I wouldn't say confusion about it. So I'd like you to categorically state, is Nigeria a low-income country, a middle-income country?
Nigeria would be considered a middle-income country, according to various classifications, including the IDA from the World Bank. Typically, countries with the income per capita of the level of Nigeria would be considered already a middle-income country, not low-income country. Nigeria is the 26th, if I'm not mistaken, biggest economy in the world. It's an important country. It has a sizable quota at the IMF, and this is why Nigeria has received yesterday $3.35 billion equivalent in SDRs, given its quota and its size in the global economy.
Is that the highest in Africa?
I will have to check, but I
check.
think so.
So, yeah.
I think so.
Because I think South Africa is about 2.3 billion.
Exactly. I think
Okay.
it's
So would you equate your definition of the SDR with a general SDR allocation? Are they the same?
Sorry, could you repeat this?
The definition of SDR,
Yes.
which you've mentioned,
Yes.
is it the same thing as a general SDR allocation?
I mean, the SDR is the currency of the IMF. Any, for example, the RFI, which was the emergency assistance that the IMF gave to Nigeria, the request of the Nigerian authorities last year, was done in SDRs.
Okay.
So all operations of the IMF with our member countries is done in SDRs.
Okay.
What we are talking here is a historical moment, in fact. The last time an SDR allocation was given to all countries in the world was in 2009, during the global financial crisis, or right after the emergence of that crisis. So, but that was $250 billion equivalent. This time we are adding, compared to that, another 400 billion. So this is the largest allocation of SDRs that goes to the membership in historical terms. So it's a very, very important moment for the IMF and for the global economy. And as our managing director says, and very precisely, is a real shot in the arm of the global economy. Is really to inject those resources to boost liquidity in foreign exchange so countries can have a way to have that liquidity and use that liquidity wisely to the benefit of their populations. And this is particularly critical for low-income and vulnerable economies.
So from what you've said so far, I can actually deduce that SDRs have been allocated 3 times? Have been assigned, yes, 3 times?
Last time it was the global financial crisis. Beforehand, small allocations happened. I don't recall the dates, but not many times. This is a very rare event. I think in the 90s or 80s there was another opportunity.
So what are the next steps really that follow the executive board's approval of the managing director's proposal, definitely for an SDR allocation? What are the next steps?
So after the approval on August the 2nd, the disbursements for all countries happened yesterday. So these disbursements, typically it varies, but most of the countries it goes to the central bank. As I was saying, this is a precious asset and it's called a reserve asset. So typically they go to the central bank. And then the country will need to decide what use it wants to make of those SDRs. It could be remaining at the central bank as reserve assets. It could be exchanged for other currencies and still remain at the central bank. And it could also be on lent or given to the Ministry of Finance, the Treasury, for important consumption expenditures that need to be.
So it came into effect yesterday. Is it simultaneously to all countries at the same time?
Yes, 190 members
at the same time.
Of
So,
the membership,
so,
yes.
so would you say categorically now that Nigeria has yesterday $3.35 billion?
I would prefer that the central bank would say
comes
that
up with
categorically, which would be my preferences. But yes, yesterday, on the 23rd of August, that credit should have been made to all 190 member countries.
Okay. After this SDR allocation, really, are countries under any obligation to exchange their SDRs?
No, they can keep those SDRs as international reserves. It adds to the stock of international reserves. So they don't have an obligation to change. And if they keep, this is also not a grant because reserve assets increase, but there is a long-term liability of the central bank vis-à-vis the IMF. So those resources earn interest, but pay interest. And the interest rate on SDR is 0.05%.
Okay, please, can you come again? Those resources earn interest?
They earn interest.
Okay.
Because they are in the reserves, they will have an interest rate of 0.05.
Okay.
But because they have a long-term liability attached to it, it would also pay 0.05%. And that's why it washes out. If it stays at the Central Bank of Nigeria, there is no impact on its balance sheet in SDRs.
Oh, there's no impact on its balance sheet?
On its balance sheet of the Central Bank. If the Central Bank changes it for other currencies and still keep it in reserves, those currencies, maybe treasuries, will be invested in treasuries, then we earn some interest, but the long-term liability in SDR stays. So the interest rate differential will accrue to the Central Bank balance sheet.
Okay, Ari, just hold on a second.
I'm hoping I'm not giving you too many details that are confusing you more than are clarifying.
Let's dig in further. I really want us to understand it, and perhaps also my audience. Let's do the mathematics of it.
Yes.
The FX reserves right now of the CBN, I checked this morning, as at the 20th of August, $33.58 billion, if I'm not mistaken. Now, with these SDR allocation of $3.35 billion yesterday, you said I should ask the CBN for confirmation, which I will do. So how does this SDR allocation impact our FX reserves? Yeah.
So the gross reserves of the Central Bank grow by that amount.
Okay, so it will become about 36.65 or so. Okay,
yes.
Okay, but is that just it in simple terms?
Yeah.
Or can the CBN also, of course, change that money or convert the XDR into currencies? Is that what you said earlier?
Exactly.
I wanted to.
So those SDRs, the Central Bank may decide to convert these to other currencies, and there is a process within the institution to do that, and it's on a voluntary basis. There are several countries who are willing to do that exchange, and it could be exchanged to any other currency that the Central Bank will decide if it wants, and it will be, but the value from one day to the next will be the same, those stock of reserves adding the 3.35 billion equivalent. So the Central Bank can decide which reserve assets it wants to carry. It could carry SDRs, it could carry other reserve assets, it could carry gold, it could carry many things. So it's really a question for reserve management of the Central Bank. Now, what's important is to note that the Central Bank will have a very long-term liability of SDRs vis-a-vis the fund, that you don't have to amortize that in a particular time, but you need to service the debt that is this long-term liability. Not debt, I would call long-term liability. It's within the balance sheet of the Central Bank. So is that more or less clear?
Yes, it is clear.
Now, of course, there is another step. If the Central Bank were to lend these resources to the Treasury, then there will be associated expenditures that will have to be registered in the government financial statistics. That will be debt. It will increase gross debt. So many people ask, what is the impact of the SDR allocation on debt?
Yeah.
In the short answer to that is it depends. If the Central Bank keeps it in international reserves, there is no impact on debt in whatever currency. It's just a question of servicing that debt, and that would be part of the debt sustainability analysis. But if it's on lent, then it's registered as government debt, because it will be used as expenditures to be registered in the government financial statistics. And this is the guidance that the IMF put in place, the IMF board, in terms of how countries should take those SDR allocations in their books, if you wish. It makes a difference. Some countries may decide to keep in reserves, some countries may decide to pay down debt, some other countries may decide to on lend for vaccines. All are very noble, laudable uses of those SDRs. It is a sovereign decision.
So it doesn't come with any policy conditionality?
No.
From the IMF?
No policy conditionality.
So we're giving you guys this stuff. This is what you should do, 1, 2, 3?
No, there is no policy conditionality. This is not a program. This is not even a a credit in the sense that, as we gave, for example, in the RFI. This is of a different nature. This is an allocation to all member countries, and there is no conditionality. What we are asking, though, is that although this is a sovereign decision, it should be a wise decision to the benefit of the country and to the benefit of its population. So the more transparency and good governance in the use of the funds, the better. And we trust that this is in the minds of our policymakers, not only in Nigeria, in all our 190 member countries. But it's very important then to be transparent. If there is on lending, also to communicate the terms and the tenure of this on lending from the central bank to the treasury. The more transparency on the use of the funds, the better. And of course, the IMF knows what the SDRs are there, and we will also do some internal use of the statistics regarding the use of SDRs in the membership.
When the executive board announced the approval, I think August 2nd, have you, at least in Nigeria, have you been able to consult with the authorities, the finance ministry, or have they consulted with the IMF on the issues of the SDR, or even other member countries?
Our understanding is that there are conversations among the institutions in Nigeria, and we will leave it to them to continue those discussions. I think it's important. These are precious resources. They don't come very often. The more there is a discussion in between the authorities and the country as a whole, I think the better guarantee that the best use can be made of those precious resources.
Okay. So from your explanation, can I take it that SDRs can be recycled, they can also be repurposed, from what you explained earlier?
Yes, it is a decision of each country to make the best use of those resources, depending on the needs. In fact, some countries may not need those resources, and we are engaging with those countries with very strong balance of payment positions, very strong international reserves position, that they actually channel their surplus, if they don't need for an immediate use, to finance, for example, some of our trusts. One of them is the PRGT, Poverty Reduction Growth Trust, that we use to finance programs for lots of other countries that need our assistance. So it's very important that we continue these discussions at the global level to be able really to channel those resources for the countries that are most in need.
So are you talking about, because I remember, I think sometime in June of this year, the G7 promised that it will reallocate about 100 billion of the SDRs to countries that need it to fight this COVID. So for countries such as the G7 countries definitely are much more stronger fiscally and all of that. So have we seen that also from them?
You are absolutely right in mentioning this, and there was that intention. I think discussions are still ongoing. Many countries have already how can I say, have already started with the putting their intention in implementation, but these discussions are still ongoing, and the managing director of the IMF has been in contact with those member countries who can afford, and hopefully we will see moves in that direction soon.
Are this, let me just ask this question, are these SDRs, are they payable back to the IMF?
Well, that's a very good question. It's an obligation of each country vis-à-vis the IMF. I would say that as long as the member countries continue to be members of the IMF, those liabilities will be of a very long term. You can think this either as a credit line or a perpetuity that doesn't have to be amortized. But of course, if a member country decides to leave the IMF, those obligations remain, and they would have to be repaid. This is not aid, this is not a grant.
That's why I asked.
It's very important to know that. But
so it's not an aid, it's not a grant. Is it a loan?
It is a loan, but with very specific characteristics that have an implication for the debt position of the country. It may not increase the debt burden of the country if it stays at the central bank. That doesn't mean that it's not a loan. It needs to be serviced, even if it doesn't have to be amortized given its long-term nature of the liability.
So if it stays at the CBN, and the CBN just stays there, it will not add to our public debt, which is 33 trillion naira as it is today, except if it is used. Okay.
But it boosts confidence, even if it stays, it boosts confidence.
Yeah.
If there are emergencies, it can be used. If there are new emergencies, it can be used. And it pays only 0.05 on the long-term liability. So really, this is a shot in the arm in the sense of providing the forex liquidity to be used as needed. So if vaccination is one of the things, be it. So each country will have to decide what will be the best use of those resources.
So are there other additional costs, or are there any costs associated with the ownership of SDRs, apart from the 0.05% which you've mentioned?
No, that's the only cost,
okay.
But that interest rate may vary.
Oh.
It is very low, and it's in fact in the floor, as low as it can be, but it's calculated. There is a formula, that, as I mentioned, on the SDRs of the interest rates, also of the 5 countries. And that's why it's very low, because several of them have very low interest rates. The important thing is that as interest rates move, that SDR obligation and the SDR interest rate will also move accordingly. But we don't expect this to happen. It's not an imminent thing because of the immense global liquidity that has kept interest rates globally at very, very low levels.
Rates, yes.
Yes.
Does that 0.05%, is it for all the member countries, or does it's for all the member countries? So it doesn't vary according to your size of the economy?
No, that interest rate is decided on the basis of a formula for everyone.
For everyone. Okay. So you say fairness and equity there?
Sorry?
Fairness and equity for the interest rate level, 0.05% across board, the 190 member countries.
Exactly.
About the issue of, because you talked about earlier, the issue of debt servicing and the issue of this SDR allocation that came in yesterday for 190 countries. Because I did also read, was it yesterday, some countries or some analysts are saying, oh, that the IMF would have done close to $3 trillion in SDRs to be able to, you know, equate to public debt. How do you see that? Do you see that that is the balancing act, so to speak? I did say earlier 33 trillion naira public debt Nigeria, and we received $3.35 billion yesterday. So is it, perhaps it's just a tiny pin in an ocean, you know? I hope you understand what I mean.
I understand.
Yeah.
You know, in economics, there will always be need for more. There are infinite objectives and scarce resources. I would say, and I would just go back to what I said before, this is the biggest allocation of SDRs in the history of the world. It's a sizable amount. $650 billion is a lot of money. Nigeria is a big country, but even to Nigeria, $3.35 billion is a lot of money. It's 10% of the stock of international reserves of the country. Sure. So we should not be apologetic in the sense of how sizable it is. It is sizable. It is important. For some economies, it will actually represent doubling the stock of international reserves, particularly countries who depleted those reserves during the crisis to be able to support households, families, vaccines, health instruments, even oxygen. So we need to take this very seriously. This is important, this is unprecedented, it's very sizable. And of course, if you are a very, very rich country, that will not represent much in terms of your reserves. But then another good reason for you to be able to rechannel and divert those resources for those who are in most need, our member countries who are the most vulnerable and low-income countries that need the most.
Let's talk about how does this recent SDR extension of the current SDR valuation basket relates to discussions on a potential SDR allocation?
I'm not sure I follow that question.
Okay. Let me try to explain. This recent SDR that has been allocated yesterday, when do we hope to see any potential SDR allocation perhaps in the future?
Oh, I see. The future is unpredictable in the sense that many shocks can happen. I think what the IMF is demonstrating as a leader of international financial institutions, and in close coordination with the WHO, with the World Bank, with other important international financial institutions, our leadership is showing that we want to help our member countries in time of need. We are in time of need because of the COVID-19 pandemic. It has really hurt economic growth and economic development of our member countries, especially those who are most vulnerable. We want to be there for them in those times, and this allocation comes to respond to that. I hope and pray that in the future, those shocks that came with the pandemic don't happen again in the future, so that those allocations will not be needed. But if they happen, the IMF has demonstrated that is in every single member country to support the member country in its challenging times.
How do we ensure transparency? The use of this SDR allocation, especially by member countries, keeping track of what is being used for. Because shortly, and I hope my team will put that on the screen shortly, because I also had to take a look at, especially countries in Africa and their IMF SDR allocation yesterday in terms. And you see that most of these African countries, or even some countries around the world, we're seeing what's happening in Afghanistan. Now, the Taliban government, the IMF has been warned that the $500 million to Afghanistan should not be given because of what is happening. So we're seeing those fragilities around countries in the world. How do we ensure that transparency is, is observed?
That's an excellent question, Nancy, and something that we need to keep repeating and reiterating. We need the support of all stakeholders, domestic, foreign, development partners, governments, civil society, to ensure that the use of those resources is transparently communicated, good governance is applied, and we are calling on everyone to help us in this important task. As you said, there are always risks in various countries, but at the end of the day, we need to make an effort collectively to ensure that the funds are well used, they are precious, and they go to the benefit of the country and its population.
Okay, let me just give you a breather for just like a minute or so. Let me go through some other member countries and also inform our viewers of how much SDRs have gone to those countries. I hope my team would follow me very quickly. Algeria, according to the IMF, Algeria would have gotten, at least allocated, $1.87 billion. And let me stick with countries in Africa, really. $1.87 billion for Algeria. Angola, $709.4 million. We have Botswana, $189 million. We have Burkina Faso, $115.4 million. Burundi, $147.6 million. For Cameroon, $264.5 million. Cape Verde, $22.7 million. Central African Republic, $106.8 million. Chad, $134.4 million. Chile, okay, Chile is not in Africa, really. But, okay, let me say Chile, $1.67 billion. And next to Chile is China, $29.21 billion. So it's the size which we were talking about earlier.
Absolutely.
Congo, $1.02 billion. That's Congo, Democratic Republic of Congo. Then we also have Cote d'Ivoire, $623.4 million. Then we have in Djibouti, $30.5 million. We have Egypt. Egypt is one of the advanced economies in Africa, $1.95 billion. So for Nigeria to get $3.35 billion, I think is the highest on the African continent.
Do you have South Africa there?
Yes, yes, we have South Africa. I'm coming to that.
Yeah.
Equatorial Guinea, $151 million. We have Eritrea, $15.2 million. Eswatini, that was former Swaziland. Eswatini, $75.2 million. Ethiopia, $288.2 million. We have Gabon, $207 million. Ghana, our neighbor, $707.3 million. Guinea-Bissau, $27.2 million. We have, let me quickly now go to South Africa and see. South Africa is the most advanced, but I think second to Nigeria. Let's quickly take a look at South Africa. South Africa is about 2 billion. Yes, I saw that earlier. South Africa is $2.92 billion. South Sudan, $235.8 billion. So, in other words, the IMF has given or has allocated substantial amounts in SDRs to African countries. I really needed to take our viewers through this. And those numbers are on the screen now. Thank you guys for putting it on the screen so that you can have an idea of what this is. So the allocation did not just come to Nigeria yesterday. Perhaps almost all the countries in Africa.
190 member countries. As far as I know, all countries in Africa are member countries of the IMF, so they should all have gone.
Okay. Let's talk a bit about the difference of the SDR allocation and the RFI, which you mentioned earlier. I know, was it earlier this year or last year that the RFI came into place? That's the Rapid Financing Instrument.
Exactly.
That's what the RFI means. Explain, and you know, because I remember then, it was a lot of confusion. People did not understand if it was a loan or a grant or because we're a member country. So I would like you to explain that, really, what the RFI means. Yes.
So the RFI is an instrument that we have that when countries run into an emergency situation, we can lend to countries. It's not a program, it's one-off, and there are no program conditions attached to it, although there is a letter of intent which was, in fact, signed by the government to sustain and to support that rapid financing instrument credit. It's a credit and it has a grace period, if I recall, 5 years. It has to be repaid in 10 years and there is an interest rate attached to it. So it does increase the debt burden of the country taking that emergency funding. Now, if you are in an emergency, you would like to take that because the interest rates, as I was mentioned, is very low compared to an emergency that you would have gotten at a much higher rate if you were, for example, to approach the international capital markets or other sources. So it is in the interest of our member countries on emergency sometimes to approach us and get cheaper way of financing. And it's very aligned, of course, with the very well-designed debt management strategy of the government of Nigeria, to first go to sources of financing that are most concessional, which is the case of some of the facilities of the IMF. So in a way, this is very different. In a way, no, in many ways, because you do not have grace periods and a tenure to repay those resources, as I mentioned before. You do still have to service that liability, but you also earn interest if you keep it in reserves. Therefore, the impact on that will be zero if it's in the central bank. And even central bank operations don't get into the debt position of the country. So in a nutshell, it's a very different situation. This is not an instrument for a particular country. This is for all the countries of the membership. It's rare. It's very sizable, as I mentioned, and as you already said, to all countries. And therefore, it has a completely different nature than the RFI, although both are efforts in the same direction, which is to support our member countries that are in need to be able to do whatever they need to do with that liquidity in foreign exchange, increase confidence, foster confidence, and ensure that expenditures that are needed for the country can take place.
For the RFI, were there conditions attached to it in terms of perhaps you need to keep track of what the government used the RFI for?
Yes, in the letter of intent there were some conditions associated with the governance, transparency, and reforms in the foreign exchange policy, and you know, many steps were taken since then in the right direction on those areas.
Okay. I needed to ask that since you're here today, because you won't be here all the time. So to get some of those things out.
Happy to remember to come here many times.
Many times as you're invited.
Yes, Nancy, it's a pleasure.
Thank you. Thank you very much, sir. Is that the only loan that Nigeria has with the IMF?
As far as I know, yes. Because never, for many, many years, Nigeria has taken other loans from the IMF.
Yeah, okay. I know why I asked, because the relationship with Nigeria and the IMF at the time was a bit sour. So now, would you say you have a good or cordial relationship with the Nigerian government?
We have an excellent relationship with the Nigerian government and with Nigeria as a country. And it gives me the opportunity to say that we are true partners of Nigeria as we are of all our member countries. We want to be helpful, we want to be present, and we want to steer discussion to good economic policies to the benefit of the country. So I'm glad to say that we have very good exchanges of view. We learn, and as much as we also pass our experience as economists to our colleagues. There are brilliant people in government handling the economy of Nigeria. It's a very difficult thing to be policymaker, particularly when you have crises and shocks of the size that the global economy received last year. So I have a lot of sympathy and respect for the authorities and the government in trying to steer the economy to its right direction. It's not easy, and there are many things that can always improve, and we'll always be saying those things together with others. But you cannot minimize the challenge of actually putting policies in place that work under these circumstances. I'm not referring only to Nigeria, referring to all countries in the membership that suffer from the shock. And frankly speaking, there were very good policies put in place on the fiscal side with a health package that was put in place to import health equipment that was needed and masks because of the pandemic, and even on the monetary side, and we have a lot of discussions, but important initiatives to finance very critical credit lines to various sectors, including health, to support Nigeria, so and the Nigerian population. So, you know, it's a challenge, and a lot has been done. So I would put these two, the RFI and this allocation, in that same bucket, if you were to consider the purpose. Support Nigeria in its difficult times.
The managing director of the IMF said sometime last year, Kristalina Gugevia, when I listened to her, said, as you spend, most countries are spending, but keep the receipts. I won't forget that. You know, so it's our duty as Nigerians to also ask the government to show us the receipts of what you're spending. But just as we close the show, you've been here for how long now?
Present in the country since May.
Since May.
But working on Nigeria since last October.
What is it that you love most about Nigeria?
Well, aside from the jollof rice and chicken.
Don't you? Aside from jollof rice and chicken. Yes. What else do you love?
That I like a lot. I like the hospitality of the people. People have been extremely hospitable to me. It's a beautiful country. Abuja is wonderful. It reminds me in many ways Brasilia, the capital of my own country, Brazil. very well-planned, nice, green. I've been to Lagos. It looks like my city, São Paulo.
São Paulo.
A little bit more
Yeah.
chaotic in the sense, also in a good sense, very entrepreneurial. I am really, really impressed with the potential of this country. And just take the ICT sector that is doing so well. The creativity, the innovation, the intelligence. I want to learn from Nigeria, together with all our IMF colleagues, and support in the discussions so Nigeria can always be better and better. But I'm having a wonderful time here, and I'm very thankful to the Nigerian hospitality.
Thank you very much. It's also nice having you here.
Thank you, Nancy. It's a pleasure.
Thank you. All right, it's a wrap. I've been speaking with Ari Aisen, who is the IMF chief here in Nigeria. Yes, he's representing the IMF here in Nigeria, the resident representative. And we've been looking at the SDR allocation to Nigeria, which became effective yesterday, and perhaps issues of the RFI. That's the much we can take. Thank you all for your company today. Please join me again tomorrow on this station, 11 a.m. to 12 p.m. I am Nancy. Nnaji, be the best you can be, and be that change that you want to see. Bye now.